friends, welcome to the channel JV and CIB Made Simple. In this particular video, we are going to cover MSME previous year memory based question which were asked on 8 March 25 examination. So this has recall question which plays very important role in the for your examination. You will be able to know which topic to focus more and which topic to focus less, means you can filter out the topic. So let's get started with our first question. So if you have not seen my previous lecture, I will provide the link in the description section. I have already prepared 2 videos covering previous year recall question. This is our third video. The link is provided in the description section. And also I want to tell you there is a Telegram group in which many aspirants have joined. So they also shared memory based question based on their experience when they appear in the examination. So I request you, if you are preparing for MSME certification exam, please join the Telegram group provided in the description section. So without wasting our time, let's start with our first question. So this question is related to NIESBUD, right? So question is, where is the headquarter of NIESBUD located? First option say Mumbai. You know Mumbai is a financial capital of India, right? So it is home to major institutions like RBI, SEBI, BSE, but any NIESBUD is not a headquarter, right? Then Hyderabad. This is also incorrect. This Hyderabad, it is a famous IT and pharma hub like Google, Microsoft, TCS. So these are placed in Hyderabad, but NIESBUD is not there. Noida is the correct answer. So the headquarter of NIESBUD is in Noida. It is an apex body under the Ministry of Skill. You must know it is under the Ministry of Skill Development and Entrepreneurship. It is MSD. We call it MSD, Ministry of Skill Development and Entrepreneurship, right? That promotes entrepreneurship and skill development. Kolkata is also incorrect answer. So you must understand that the moral of this question is that NIESBUD headquartered is Noida or on Uttar Pradesh, and it works under Ministry of Skill Development and Entrepreneurship. It focuses on entrepreneurship and skill training, right? So that is the correct answer. Option number C is the correct answer. Now the second question is, CAMEL is used for evaluating the performance of, right? You might have heard about this CAMEL. This is an acronym, right? So friends, option A suggests mutual fund, option B bank and financial institution, stock market, insurance company. So please, do you know what is the correct answer? Option A, mutual fund. Mutual fund pool money from investor to invest in a stock, bond and other asset. So they are evaluated based on returns, expense ratio and risk factor. This is not the correct answer. The correct answer to this question is bank and financial institution. Yes, the CAMEL rating system is used to evaluate banks and financial institution. So sometimes question may be asked regarding full form. You must know the full form of CAMELs. What does C stand for? Do you know what does C stand for? C stand for capital adequacy. Let me write down the important point. So C stand for C stand for capital adequacy. What is the meaning of capital adequacy? Means does the bank have enough capital to handle the risk? This is called capital adequacy. What about A? A stand for asset quality. A stand for asset quality. What is the meaning of asset quality? See, are the bank loan and investment safe? That is called asset quality. M stand for management efficiency. M stand for management efficiency, which means is the bank leadership good? Then E stand for E stand for earning. What is the meaning of earning? That is the bank profitable. And this L stand for liquidity. Liquidity, you know it very well, that does the bank have enough cash to meet obligation? So just like doctor check your health using blood test, CAMEL rating check a bank financial health. C for capital adequacy, A for asset quality, M for management efficiency, E for earning and L for liquidity. So you must remember this formula, this full form, very very important. If we talk about option number C, that is stock market indices, this is incorrect. So indices like Sensex, Nifty, and so they track the performance of group of stock, right? These are tracked by indices. So the performance depends on factor like market trend, investor sentiment, economic condition, not the CAMEL system. And insurance company, they are evaluated. Their insurance company are evaluated using solvency factors, solvency ratios, claim settlement ratios, and IRDAI norms. So the final summary is that CAMEL rating system is used for bank and financial institution. 5 key components are there: capital adequacy, asset quality, management, earning, liquidity. Right? That is the point. Now let's see the next question. Question number 3 is on your screen. As you can see, it says that the 5C are primarily used in which area of banking? Yes, you must be aware of this 5C, right? So they are used in which area of the banking, right? Option A, risk management. What do you think? Risk management in bank focus on identifying, analyzing and reducing the risk. What we do in risk management, in risk management part, what we do, we first identify, then we analyze, and then what we do, we reduce the risk, right? Like market, credit, operational risk. So while credit risk is a part of risk management, the 5C are specifically used in credit appraisal. So just like doctor checks your medical history before giving medicine, a bank check a borrower credit worthiness before granting loan. But this is a part of credit appraisal, not overall risk management. So this is wrong. Option number B say credit appraisal. This is the correct answer. So you know, these 5 C's of credit are used in credit appraisal, where bank assess whether a borrower is eligible for a loan. So let us simplify what are these 5 C. The first C, you know, is character. The first C, you know, is character. What is the meaning of character? That means when I say character, it means the borrower past credit history and repayment behavior. The second C, you know, is about capacity. Capacity, what does it capacity means? Means the borrower ability to repay the loan based on income and existing debt. The third C, you know, is about capital. What is the meaning of capital? Like the financial strength of the borrower, including their own investment in the business or project. The fourth C, you know, is collateral. Collateral, you know it very well, that asset placed as security for the loan, like property, gold, or fixed deposits. And the last C is about condition. So economic and market condition affecting the borrower ability to repay, right? So let me give you an example to make it more clear. Imagine a bank giving a home loan. So they will check your salary. So your salary, you know, first of all they will check your salary, right? So your salary is like your character, right? So character means sorry, salary means your capacity, not character. Just wait a minute. Let me write down in correct place. So you know, salary is just like your capacity, right? Salary is your capacity, right? Then you know, they will also check your credit score. So credit score, so what is credit score? Credit score is like your character. Your score is like your character. Also, you know, your saving they will check. So they saving your like your capital, right? So they will also check, they will also place your house as security. So that is your, this house your collateral. And the real estate market will also check, that is called condition, before approving the loan. Option number C, CRM. This is wrong. You know that CRM is about managing relationship with the customer to improve service and business growth. It focuses on customer feedback, complaints, and engagement, not loan approval. For example, if you visit a bank for a loan, the CRM system helps track your queries, but the loan approval depends on 5 C's of the credit. Option D says treasury operation. This is wrong, because treasury operation in the bank manage cash flow, investment, foreign exchange, and liquidity. Treasury operation handle how much cash a bank has for lending, but who gets the loan is decided through credit appraisal using 5C. So what we learned from the discussion is that, you know, 5C of credit are used in credit appraisal to assess loan eligibility. 5C means character, capacity, capital, collateral, and condition. It is not related to risk management, customer relationship management, or treasury operation. I hope this makes sense to you. Now let's switch our focus to our next question, which were asked on 8 March examination. The question, as you can see, if an individual CIBIL score is 750, what is the associate risk category? So before going into this question, let me tell you that if you are looking for MSME study material, we have a fully fledged course on MSME, from where students have cleared the examination, which have recently been held, right? In this course you get unit wise theory PDF, unit wise MCQs PDF, as well as previous year question, right, which provide you sufficient knowledge to equip you to the with the knowledge, so that you can easily crack the examination. So if you want to get detail regarding it, you can WhatsApp me on this particular number, right, 82857381, to get more detail regarding the course, right? So the link of the course is also provided in the description section of this particular video. Now let's come back to this question. So friends, this question is about, you know, a CIBIL score and risk category. So option number is suggests high risk. So if we talk about the high risk borrower, you know, a high risk borrower is someone with a poor credit history, meaning they will have defaulted on loan, or they will have very low CIBIL score, especially below 650. So bank hesitate to give loan to such individual. For example, imagine you have a friend who always borrow money but never repays on time. Would you lend them money again? Of course not. That is exactly how banks see high risk borrower. So a CIBIL score of 750 is not considered high risk. So option is wrong. Normal risk. Yes, this is correct. So CIBIL score of 750 falls under normal risk category. People in this range have a decent credit history, meaning, so let me write down, this is the key point, they have a decent credit history. It means that they pay their EMI, they bill on time, bank feel comfortable giving them loan, right? So you must know that if the credit history, if the CIBIL score is in this range, 300 to 649, it means high risk is there, risk is quite high. And if it fall in 650 to 749, so this is basically normal risk. This is basically, we can call it normal risk. And if it is 750 plus, it means that low risk, right? So for example, if you have CIBIL score of 750, it's like being a responsible student who submit homework on time. Your teacher, that is your bank, trusts you more than and gives you more better opportunity. Option number C is a low risk. Yeah, this is wrong, because typically have a CIBIL score above 800. These people have excellent credit history and get the best loan offer with lower interest rate. And very high risk, this is also incorrect. Why? Because the very high risk borrower have a CIBIL score below 500, and these individuals have frequent default, missed EMI, or loan settled with bank instead of full repayment. Right? So if a student never submit assignment and fail at test, teacher won't trust them with responsibility. Similarly, bank don't trust borrower with very low credit score. So the final summary from this discussion is that CIBIL score is a measure of credit worthiness ranging from 300 to 900. Right? 750 plus is a good score and fall under the normal risk category. High risk below 650, normal risk 650 to 750, 749 to be more precise. Now the next question is, which of the following is a primary role of KVIC? Very important question. What is KVIC? Khadi Village and Industries Commission. So what is the important role of KVIC? So this question is regarding KVIC. Option number A, promoting large scale industrialization, generating rural employment through khadi and village industry, obviously regulating foreign trade policy, and obviously B number is option is correct, because KVIC, which was established under the Khadi and Village Industry Commission Act 1956, is a statutory body focusing on promoting and developing khadi and village industry to create employment opportunity in rural India. Right, strengthening the rural economy, preventing migration to urban area, and supporting decentralized economic development through skill development, technology transfer, R&D, and marketing initiative. Very easy. Now this is very important question. This question is regarding to PMEGP, Prime Minister Employment Generation Program. Who is eligible to apply for financial assistance under PMEGP? Very important question, that who can apply for financial assistance under PMEGP. So friends, PMEGP, Prime Minister Employment Generation Program. So option number A, an individual above 18 years of age with at least 8 standard pass for manufacturing project above 10 lakh and business service project above 5 lakh. So PMEGP is a government scheme that provide financial assistance. So when I say this financial assistance, what I mean to say is that it provide you subsidy and it provide you loan. Two things it provide, subsidy plus loan. Right? Who can apply? Any individual above 18 years of age. If the project cost is above rupees 10 lakh for manufacturing or above 5 lakh for services, right, the applicant must have at least 8 standard pass, right, and there are some other eligible group also, right, SSG is also there, production based cooperative are also there, and charitable trust are also there. Let me give you an example. Imagine a person named as Raj want to start a furniture making unit costing rupees 12 lakh. He want to start a furniture making unit which costs rupees 12 lakh. Since this manufacturing project is above 10 lakh, he must have at least 8th grade education to qualify for this. That means option number A is correct. Option number B suggests only SHG and cooperative society. See, SHG, self-help group, society and cooperative can apply. They are not the only eligible entity. For example, if Ramesh as an individual want to start a grocery store, he can apply alone without being in SHG or cooperative society. Since PMEGP is not limited to just SHG and cooperative, that's why this option is incorrect. Option number C suggests existing unit under PMRY, REGP or any other government scheme. So PMEGP only for new business, new product, new project are allowed. Existing units that have already received benefit under PMRI, what is the meaning of PMRY? That is Prime Minister Rural, it is a Prime Minister Rozgar Yojana. REGP, what is REGP? Rural Employment Generation Program. So existing unit that have already received benefit under this program, they cannot apply again. For example, if Suresh already received a subsidy for his small textile business under PMRY, he cannot apply for another subsidy under PMEGP. Option number D, any unit that has already availed a government subsidy under any other scheme. This is also incorrect, because if someone has already taken a subsidy under another government scheme, they cannot apply for PMEGP. For example, if a company got rupees 5 lakh subsidy under Stand Up India, it cannot apply for another subsidy under PMEGP. So what we learned from this discussion is that PMEGP provide financial assistance for new business. Individual above 18 years can apply. For large project, 8 standard pass is required. Self-help group, cooperative, charitable trust also eligible. Existing unit that have already received subsidy under other government scheme, they are not eligible. Right? That is why fully fledged understanding is very much required. That's why I explain each and every option, so that you must understand what are the pros, what are the eligibility. Remember, this eligibility is very important. You can see eligibility written here. Right. Now, what is the minimum and maximum number of partner required in LLP? This is another good question based on which we are asked. You know what is LLP? Limited liability partnership. Option number A, minimum 2 partner, maximum no partner. Yes, correct. So you know what is the act? What is the act name? This is called LLP Act 2008. So it says that every LLP must have at least 2 partner. There is no maximum limit on the number of partner. There must be at least 2 DP. What is the meaning of DP? DP means designated partner, and at least one must be resident of India. Let me give you an example. Suppose 2 friends are there. One is Amit and other is Raj. So these 2 friends, want to start an IT consulting firm together. So they can register as an LLP with just 2 partner. Later they can add more partner without any upper limit. That is why option A is the correct answer. What about B? 3 and 50. This is wrong, because LLP require minimum of 2 partner, not 3, and there is also no maximum limit on LLP. So if only 2 people want to start an LLP, they can legally do so. The law does not require 3 partner. Minimum 2, maximum 200. This is also wrong, because a private limited has maximum limit of 200 shareholder, but an LLP does not have such restriction. So you must know, if it has been private limited, then this option would have been correct. But since it is LLP, they have no limit on maximum number. 5 and 500. This is also incorrect, right? So what we learned from this discussion is that LLP requires a minimum of 2 members or 2 partners to be registered. Remember it. So it should have at least 2 partners, right? And that there is no maximum limit. There is no maximum limit on the number of partner in an LLP. At least 2 partner must be designated partner, DP. We call it DP, right? And one must be resident of India. This is another condition. One must be resident of India. You must note it down, right? And LLP are different from private limited company, which have maximum limit of 200 shareholder. Private limited company, they have a restriction of 200 shareholder max. That's it. So we can see we have learned 4 concepts from this particular question. That is the beauty of this learning, right? We don't only learn what is asked, we learn something different which may help you in upcoming examination. Now the upcoming question is, what is the full form of NIESBUD? I told you about NIESBUD in the first question. Remember it? Now it's full form. So friends, option A, it suggests National Institute of Employment and Skill Based Development. This is wrong, right? Option B says that National Institute of Entrepreneurship and Small Business Development. Yes, it is correct. Very good. It is correct. Option number B is the correct. So let me talk you something about this NIESBUD. I told you it is under MSDE. MSDE, Ministry of Skill Development and Entrepreneurship, Government of India. Its headquarters is in Noida, Uttar Pradesh. It plays a major role in training and promoting entrepreneurship and small businesses. It provides workshop, training program, skill development initiative. Let me give you an example. Imagine you want to start a small business. Suppose that you want to start a small business, right? But you don't know how to get funding, market your product, or manage account. So NISBUD provide you training program to help you learn all these skills, right? Option number A is wrong, right? So option number C is also. So option number B is the correct. I hope we don't require explanation of all the option, because only one option is correct, which is entrepreneurship. Now let's switch our focus to the next question. Very good question. Which of the following is not a component of new MSME champion scheme? Very, very important question. You know about this new MSME champion scheme? MSME sustainable JDD, MSME innovative, MSME competitive, MSME export promotion scheme. Correct answer is MSME export promotion scheme. So you must remember that this champion scheme consists of 3 main components. When we first component is MSME sustainable JDD. What is JDD? Zero defect practices to promote sustainable and environmentally friendly manufacturing. This is called zero defect practice. The second part is called MSME innovative. What is innovative stand for? Incubation, right? It support incubation, intellectual property right, designed to encourage innovation in MSME. And the third is competitive. It aims at improving efficiency, competitiveness through lean manufacturing technique. So you must understand these 3 parts of this champion scheme, right? So this promotion scheme is not a part of champion scheme. Now the next question is under the TechUp. TechUp means technology and quality upgradation. What is the maximum financial support provided by Government of India for implementing EET, that is energy efficient technology? Very important question. This was asked in March 3rd examination, March 8th examination. So friends, how much financial support does the Government of India provide under this scheme? So friends, option number A suggests 50% of the project cost up to 20 lakh. This option overestimates the government financial support. The scheme does not provide that much, right? Option B, 25% of the project cost up to 10 lakh. Yes, this is correct. So first of all, you must know that TechUp scheme is a part of National Manufacturing Competitiveness Program, which is called NMCP. What is NMCP? National Manufacturing Competitiveness Program, right? It aims to help MSME adopt energy efficient technology, that is called EET, right? EET, to improve their production process. And the government provide 25% of the project cost with a maximum cap of 10 lakh per project, right? The project must show at least 15% energy saving to qualify for funding. The project must show at least 15% energy saving. For example, suppose a small factory want to replace old machine with an energy efficient one costing rupees 40 lakh. So a small manufacturer, a small factory want to replace old machine with energy efficient one costing 40 lakh. Under this scheme, 25%. What will be the 25% of 40 lakh? Please let me know in the comment section. So 25% of 40 lakh means 1/4 of 40 lakh, which is nothing but 10 lakh. So the 10 lakh is the maximum support which allow. Means the government will allow, provide 10 lakh and the business owner will arrange the rest. That's why option number B is correct, right? Up to 10 lakh. Option number A suggests 50% of the project cost up to 20 lakh. This is incorrect. For example, if MSME apply for 20 lakh in funding, the government will only approve 10 lakh, not more. Option C, 100% of the project cost. This is also incorrect. So if a business want to install solar panel costing rupees 4 lakh, the government will only contribute 25%, that is 1 lakh, not 4 lakh. And no financial support. This is also incorrect, right? This is completely wrong because the government does provide funding under TechUp. If MSME has to bear the entire cost of upgrading machine, many small business would not afford it. That is why government steps in. So what we learn from this question, let's summarize finally. So let me give you the summarization here. You know, this TechUp scheme is a part of NMCP. What is NMCP? National Manufacturing Competitiveness Program. First point. Second point, it helps MSME adopt EET, that is energy efficient technology. Second point. Third point, that it government provide 25% of the project cost up to rupees 10 lakh. Fourth point, the project must show at least 15% as per the DPR, as per the detailed project report, right? I hope that makes sense to you. Please hit the like button if you really think that till now your concept is clear, because it takes lots of effort to gather all this information, to collect the information from the students who have given the examination and provide you input. Now let's see the next question. Under which legal framework are SSIDC typically registered? You know what is SSIDC? SSIDC stands for State Small Industrial Development Corporation, right? Option A, Companies Act 1956. Very good, that's the correct answer, right? You know, SSIDC are government owned corporation. First thing first, they are government owned corporation, right? They are set up by state government. Who set them? They are set up by the state government. Why is state government set them? To support and promote small industry, right? To promote a small industry, right? They are typically registered under the Companies Act 1956, which provide them with proper corporate structure. So this helps them function as organized corporate entity. The main activity includes, you know, providing land, providing machinery, providing raw material. To whom? To a small industry, right? It helps MSME with financial aid. For example, suppose a state government want to help businesses in its region. So instead of setting up multiple small agency, it register SSIDC under the Companies Act. This make it a structured organization with a clear objective and rule. Option number B, Indian Partnership Act. This is incorrect, because you know SSIDC are not partnership, they are government owned corporation. For example, a small textile shop run by two partners under a verbal agreement come under the Partnership Act, but a state industrial corporation need a strong legal structure. That is why it is registered under Companies Act. Option C, Limited Liability Partnership. This is also incorrect. You know, LLP are privately formed business, while SSIDC are government owned organization. So if two professionals like CA firms or law firms want to start a business together with limiting their liability, they can register under the LLP Act. And what about the Cooperative Society Act? This is also incorrect. You know that in this act, member pool resources for mutual benefit. So SSIDC are not cooperative. So what is the final summary? What we learned from this discussion is that, let's summarize the fact. So this is the learning. So SSIDC is a government run organization that promote a small industry. They are registered under Companies Act, right? The correct answer is option number A. That's it. Now let's look at the next question. This question is regarding TUF, that is Technology Upgradation Fund, is primarily implemented in which sector? So I will tell you every information about this TUF, Technology Upgradation Fund. So option number A, textile. Yes, very good. It is T for textile, T for TUF. This way you can remember. You know, it is a government TUF. You know, it is a government scheme. First thing first, it is a government scheme, right? It is a government scheme that modernize the textile sector. It provides financial assistance for upgrading machinery, for adopting energy efficient technology and improving productivity. And you know, Ministry of Textile, right? Ministry of Textile launched this scheme to help Indian textile industry compete in the global market. For example, imagine a small textile factory. For example, you can imagine a small textile factory, right? using old weaving machine. So with TUF support, the factory owner can buy modern automated tools, looms at a lower cost. This increase production speed and quality, helping business grow. Option B, food processing. This is incorrect. Food processing, there are some scheme like PM Kisan Sampada Yojana, Mega Food Park scheme. So TUF is not related to food processing. Automotive, this is also wrong. There is some scheme called FAME scheme. You might have heard about this FAME scheme. What is FAME scheme? That is faster adoption and manufacturing of electric vehicle, right? So a company making electric car will get benefit under FAME scheme, not TUF. And for IT, there is something scheme called STPI. STPI, Software Technology Park of India, right? So the final answer is, textile. T for textile, T for technology upgradation fund. This way you can remember it. Now, what does UNIDO stand for? So its full form is United Nations Industrial Development Organization. I am skipping this question because it's very easy. Let's look at the next question. Very, very important. Which of the following best describe the purpose of asset turnover ratio? Right, asset turnover ratio. So the question is, what does this ratio tells us and why is it important for businesses? So option number A suggests that it measures a company debt relative to the asset. This describe the debt to asset ratio. So option number A describe, debt to asset ratio. It describe debt to asset ratio, right? The debt to asset ratio tells us how much of a company asset are financed through debt. Let me give you an example to make it more clear. For example, if a company has 1 crore in total asset, and rupees 50 lakh in debt, so the DA ratio will be 50%. So this does not measure efficiency in generating revenue. So option A is incorrect. Option B suggests it indicates how efficiently a company uses its asset to generate revenue. Yes, this is the correct answer. This is what is the purpose of asset turnover ratio. So this asset turnover ratio, it tells us how efficiently a company is using its asset. So suppose this is the company, it is using its asset to generate revenue. So the formula of asset turnover ratio is net sale upon average total asset. Net sale upon average total asset. So higher ratio means the company is using asset efficiently to generate the sale, and lower ratio may indicate underutilization of asset. For example, let me give you an example to make it more clear. Suppose there are two shops selling mobile phone. This is shop A, this is shop B. So shop A has asset worth rupees 10 lakh, and shop B also has asset worth rupees 10 lakh. But shop A generate 20 lakh rupees in sales, and shop B generate only 8 lakh in sale. So shop A has higher asset turnover ratio, meaning it is using its asset more efficiently as compared to shop B. That is why option B is correct. Option C, it reflects the company profitability by comparing net income to total asset. Option number C. See, this is called ROA. When I say ROA, return on asset, it is nothing but net income, that is called net profit upon total asset. This is called ROA. This is not called asset turnover ratio. So this tells us how much profit a company earns per rupee of asset. For example, if suppose a company has 10 crore in asset, and suppose it earn rupees 1 crore in net profit. So what will be its ROA? It will be 1 crore upon 10, or we can say 10%. I am again repeating. Suppose 10 crore a company has it in form of asset, and it earn 1 crore revenue, right? 1 crore net profit. So its ROA will be 10%. So option C suggests about ROA, that is return on asset. So this is also incorrect. Option D suggests it assesses the liquidity of company by comparing current asset to current liability. So this is called current ratio. Current ratio, which is CA upon CL, current asset upon current liability. For example, if a company has 5 lakh in suppose current asset and 2.5 lakh in suppose current liability, right? So its current ratio will be how much? Its current ratio will be 2, which means it has twice the asset needed to cover short-term debt. So this measures liquidity, not efficiency. So option D is incorrect. So what we learned from this discussion is that we have learned regarding the asset turnover ratio, right? So asset turnover ratio, the formula for asset turnover ratio is sales in the numerator upon average total asset in the denominator, right? It shows how efficiently a company use asset to generate revenue. And if this ratio is higher, it simply means that it means that better efficiency. Lower ratio means underutilization. So if this asset turnover ratio is higher, it simplifies that company is using its asset more effectively. And if this ratio is lower, it means underutilization of asset, right? So it is not related to debt, it is not related to profit, it is not related to liquidity. So friends, if you want to make more such videos, make the part 2 of this particular video, that is raised question. please write yes in the comment section. I will come to know that yes, you are interested in such kind of content where every concept, I don't only tell you the correct option, I explain each and every option using example possible, so that you will have conceptual understanding. Our main focus is conceptual understanding. You should know what is the meaning of asset turnover ratio. You should know what is the meaning of this so-called current ratio. You should know what is the meaning of this so-called ROA, return on asset. Every aspect we touch upon. If you want me to make the part 2 of this video, please write yes in the comment section. And I request you, if you want a study material, feel free to WhatsApp me on this particular number to get more detail regarding the study material. Thank you for listening to this lesson. Hope it will help you in your upcoming examination. All the best for examination. Thank you.